recently, we have been talking about like what are indicators for high quality insurance agencies, and I wanted to share one tip on what is an indicator of an agency that's not good. And the reason I'm bringing it up is actually because we had an NPS score. I think it was like a 6 or something like that. So we always call them and ask for feedback to understand like how we can do better and that type of thing. So the feedback that we got is last year we purchased an agency, and come to find out this previous agency owner every single year would proactively requote everybody's insurance. And that was, what this person thought was what we should be doing. And you know what? I think that I would have probably thought the same thing when I first started to be an agency owner. But it's actually not the case. You don't want to have your insurance remarketed every year. So there's a few reasons why, and I just thought this is a really good opportunity to take a minute and educate on why. So I would say, first and foremost, you don't want to have someone proactively just quoting for you because they don't know what has changed for you during the course of the last year. Maybe you've added a deck, or you've finished your basement, or you've replaced your roof, which many of us have. And let me just tell you, that's a giant, giant discount right there. So when you're missing out on what the current picture looks like, because we all know that things evolve over time. We, buy and sell different things, and our picture just doesn't look the same from year to year. And so we need to make sure that we're getting clear on what those things might look like, rather than just running straight to quoting. So that's number one. Pretty simple to understand. Number two is that insurance has really become very similar to like an insurance, like that there's an insurance score, similar to like a credit score. So for instance, we know that if you're out, say you're looking to buy a house, you don't want to go out and be getting all these credit hits because it's sensitive, right? That your credit is sensitive and you want to protect it. Well, now with insurance scores, which was introduced, over 20 years ago at this point, but that is the same thing. If you are quoting and you are shopping every single year, that negatively impacts your insurance score. And so you really want to avoid doing that. And so that's why, us having the opportunity to review with clients and taking a look to see, maybe it's reworking the policy, or there's a lot you can do, but just going to an automatic default of quoting your insurance every year is actually something that can very actively work against you. Additionally, come claim time, companies do look at your longevity and your loyalty, and that really does count in your favor. And lastly, I would just say, the more times that you move a policy, the more opportunity there is for human error. Maybe there was endorsements that you had that didn't get pulled over, or a jewelry rider that you had that maybe got missed with moving. It's like all just increases the opportunity for human error. And so I would just say, like, just kind of delete from your mind that some indicator of quality has anything to do with proactively quoting every single year. Yes, we should be reviewing every year because we want to make sure that your coverage fits your needs, which are unique to you, but that doesn't mean like fully going to market every single year.